Hello, we are Team E and we participate in SafePay Research Challenge.
Our team conducted an investment research of Qiwi company.
Let us present our report and introduce ourselves.
My name is Dennis.
My name is Pavel.
My name is Alexei.
My name is Igor and I am responsible for industry competitors analysis.
Let us start our presentation with an overview of our investment decision. We initiate coverage of Qiwi, one of the largest electronic payment companies in Russian Federation, with a sell rating and a $38.9 target price, with a 30% downside potential by the end of 2014. Further in our presentation and in our report we provide a detailed description of the company's business and give a justification for our opinion.
Qiwi Public is a company operating in the market of instant payments. Its main activity is to provide payment services for its clients. Qiwi services are primarily used for e-commerce payments, for communications, bills, etc. It operates in more than 8 countries, although 95% of its total revenue is generated in Russia. Today, Qiwi Public is mainly represented by processing services for cash and online payments, while services like on-screen advertisement still constitute for insignificant portion of its revenue. The leading operational segments are: first, Qiwi Distribution, which controls all payment services offered through terminals and kiosks, and second, Qiwi with a Wallet, which is responsible for all the payment processed through online electronic user accounts and bank prepayment products. Presently, Qiwi Public consists of 12 companies, which support group's activity. It operates under the agent model of business. Under the agent model, it outsources cash collection procedures to numerous agents. They buy and maintain a terminal on their own behalf. However, they are obliged to pay a monthly license fee. On the 13th September 2013, authorized capital of Qiwi Public consists of almost 230 million ordinary shares. 157 million were A-type ordinary shares. 75 million were B-type or American depository shares. There is no difference between them except for voting power. Each A-type share provides 10 votes, while B-type only 1. The chart with holders of American depository shares is presented here. A full list can be observed in our report.
The rapid growth of the Internet in the 1990s created the demand of the society to pay for goods and services online. This led to the development of electronic payment systems market all over the world and particularly in Russia. There are 3 main types of electronic payment systems available to users in CIS: electronic money, payment terminals, and mobile payments. Overall, the market demonstrated the great performance results in the end of the first decade of 2000s. Annual rate of growth was 31% in 2009, and it is estimated by Jason and partners to stay above 20% till the year 2017. The market value is 1.8 trillion rubles and it is predicted to double by the year 2017. In Russia, Qiwi is presented mostly in the market of payment terminals with market share more than 50%, and electronic money with a market share less than 10%. The growth rate of kiosk payment revenue is expected to decrease from 14% in 2010 to 2% in 2017. The electronic money market revenue growth is going to decrease tremendously from 120% in 2008 to only 10% in 2016. Considering these figures, we expect the company will not be able to show such rate of growth in these segments in the future.
We will consider competitors of target company in 2 aspects: Russian competitors and foreign competitors. You may see main peers on this slide. Tables illustrate segments of business where companies compete with Qiwi. AlexNet is a full analog of Qiwi. Company provides clients with full set of payment services. AlexNet has 40 million clients, annual turnover about $57 billion and sales about $1 billion. Yandex Money competes with Qiwi only in e-wallets niche. Yandex Money has 11 million wallets versus 14 million wallets of Visa Qiwi Wallet. NetElement is a group of technology companies providing payment solutions with 54 million e-wallets holders in Russia. Among foreign peers, we mention such as PayPal, Proxima, and Payment Data Systems. All companies deal with e-wallets, mobile commerce, and distant payment solutions, but there are no full analogs of Qiwi abroad. The main reason of unpopularity of Qiwi's peers abroad is insignificant share of cash payments. Analysts predicted growth of credit cards users to 2017 by 22% on the average. So Qiwi has strong positions in Russia and CIS, but could only compete in e-wallets business abroad. Qiwi's model is successful only in cash economics.
Let us present valuation part of our report. Our recommendation on Qiwi is sell with a 2014 target price of $38.9 per share of Qiwi, with a 30% downside potential from January 7, 2014 price of 56. We use a weighted valuation model with 50% of total weight given to Gordon discounted dividend model and 50% given to discounted cash flow model. In our approach, we assume a 20.5% discount factor and 18% compounded annual growth of dividends per share for the next 5 years. Taking into account all the present trends, current multiples for the industry and forecasted future free cash flows from our DCF model suggest an enterprise value of 63,900 million Russian rubles and $37.24 price per share of Qiwi. As you may see, free cash flow generated by Qiwi is expected to steadily increase by the year 2018. You may see a detailed version of cash flow for forecast statement in our report. We expect dividends per share to grow at a compounded annual growth rate of 18%. Also, during the recent years, Qiwi demonstrated a confident and stable dividend policy, increasing the share of its profit paid to its shareholders. Thus, we expect a greater proportion of its net profit given as dividends in a future. The weight of each group of risk in our discounted dividend model is calculated on the basis of Qiwi current ownership structure, management quality assessment, country premium for Russia, which is typically demanded by investors, overall industry performance in the recent years, historical return of the Russian stock market. Using the Gordon model for the results we have obtained, we get an estimate of $42 price per share of Qiwi. Qiwi is also overvalued according to multiples. As you may see, it is traded at EV/EBITDA equal to 25 and PE equal to 54. These multiples are way higher than the industry average. Also, compared to non-traded peers prices taken from M&A market, Qiwi also looks heavily overpriced. After setting a target price for 2014, for Qiwi it is also important to account for the exchange rate trends. If measured at the current exchange rate of 33 rubles per US dollars, the target price using 50/50 DCF/DDM model is $42.4 per share. However, we don't expect the exchange rate to remain the same. Following the forecasts and expectations of Russian economic policymakers regarding the performance of Russian economy and its trends in the next year, we expect the exchange rate to be 36 Russian rubles per US dollar. Thus, our target price adjusted for the exchange rate in 2014 is $38.9 per share of Qiwi. Here you may see our financial ratios forecast. As you may see, gross margin is expected to increase as we anticipate total revenue growth rate to be higher than the growth rate of cost of goods sold. However, we expect EBITDA and net profit margins to decline because we expect an increase in indirect costs like advertising expenses. We think that rate of return on equity is expected to increase in the future, reaching 93% in the year 2018. Liquidity ratios suggest that Qiwi is relatively financially stable and is credible and able to fulfill its liabilities.
In fact, there are two major risks which can affect Qiwi. The first one is the possibility of macroeconomic downturn in Russia and the CIS countries, and the second one is the possibility of tightening of legal restrictions and regulations affecting the business model, which can decrease profitability as a result of high competition in the industry.
Qiwi Public is governed by 8 directors, 3 independent directors and 5 executive officers. They only possess A-type shares and represent 72.3% of total stocks. However, 43.7% of the company is owned by Sergei Solonin, and his share in Qiwi increases as he continues to buy more shares of Qiwi.
To summarize, here are the 4 main factors which are likely to negatively impact the price of Qiwi in the following year and serve as a basis for our recommendation. We expect weak macroeconomics of Russia and ruble depreciation. Qiwi is traded with a premium to its peers, and in our opinion it is unjustified. We expect growing competition and industry growth rate slowdown, and Qiwi may be subject to tightening of legislation and governmental control. So our target price is $38.9 US.